Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. New Frontier Data just released new tax incentives for cannabis companies. They cite the recent passage of the 2018 Farm Bill, which descheduled industrial hemp and its derivatives. The new law, combined with the pending bipartisan bill strengthening the 10th Amendment through entrusting states, is paving the way for cannabis-related businesses to be treated like any other agricultural business. The impact of Section 280E on the Internal Revenue Code has put some cannabis companies at a disadvantage relative to non-cannabis businesses. Yet the passage of the 2018 Farm Bill results in hemp cultivators and hemp CBD manufacturers no longer being subjected to Section 280E at the beginning of the 2019 tax year. Namely, any part of the cannabis plant containing no more than 0.3% THC in dry weight is called industrial hemp and is no longer scheduled. As such, businesses that traffic in industrial hemp or its derivatives are no longer subject to Section 280E. Cannabis companies that are not hemp businesses remain subject to Section 280E. Businesses not subject to Section 280E can deduct their ordinary and necessary business expenses instead of just the cost of goods sold. It was another news-filled week in the weed world. Harvest Health and Recreation acquired Chicago-based Verano Holdings in an all-stock deal valued at $850 million. Nelson Holdings, Deloitte, and Headset are partnering up to provide market insight for cannabis businesses. Tilray appointed Andrew Purcher, a former managing director at Goldman Sachs, as its chief corporate development officer. And the prices keep climbing for cannabis companies. Texaco said it was willing to pay $263 million for New Strike brands. Acreage Holdings said it paid $11 million for one dispensary in California. And over the last 5 trading days, their Horizons Marijuana Life Index ETF gained 5%, while the ETFMG Alternative Harvest ETF rose roughly 4.6%. Here are some of the top cannabis stocks with a market cap above $400 million in the U.S. exchanges. Acreage Holdings was up almost 15%. Afria flat. Aurora Cannabis up 24%. CanTrust Holdings 7.6%. Curaleaf Holdings up 8.7%. Green Thumb Industries up 10.5%. Hexco up 12.2%. Harvest Health and Recreation 27%. In other news, Canopy Boulder, a business accelerator and venture fund for ancillary cannabis businesses, raised over $4 million for its most recent fund. The capital will be used to make investments into 10 promising businesses operating in the legal cannabis industry. Each company accepted into the accelerator program will receive up to $130,000 mentorship, critical resources, and introductions to industry experts and investors in exchange for a mixture of equity and convertible debt. Snoop Dogg and his media platform, Mary Jane, teamed up to launch a new tournament series, Gangsta Gaming League. This series would broadcast live on multiple platforms. CV Sciences reported fourth quarter earnings with a record revenue of $48 million for 2018, up 133% year over year, and recorded net income of $10 million or 9 cents per fully diluted share. Aurora Cannabis' stock recently popped after bringing on a promising new strategic advisor named Nelson Peltz, who worked with an investment firm called Trian Fund Management. This is one more instance of the cannabis industry normalizing as a noted billionaire activist investor jumps on board. Aurora says it's going to work with Peltz on both a global expansion strategy and to, quote, to explore potential partnerships that would be the optimal strategic fit for successful entry into each of Aurora's contemplated market segments. Peltz said that he believes Aurora has a solid execution track record and strongly differentiated from its peers. They've achieved integration throughout the value chain and is poised to go to the next level across a range of industry verticals. He also believes that the Canadian licensed producers, and that Aurora in particular, are well positioned to lead the development of the international cannabis industry as regulation evolves with a strong, globally replicable operating model. This is only one noted billionaire, but as we see people leave their jobs at Goldman Sachs or this fund management, Fortune 500 companies, politicians, it's just a matter of that snowball rolling, and it's legitimate. You wouldn't have people just jumping if they didn't believe that it had a long-term legalization and implication. There was too much at stake if they're going to risk their reputations and their funds and leave. So it's a good sign. Right now, there's arguably no hotter industry on the planet than cannabis. It's been reflected in the valuations of nearly every cannabis stock. And since the year began, well over a dozen of the most popular pot stocks are now up more than 50%. A quick review into the industry provides evidence on why cannabis stocks have been unstoppable. In just the past 6 months, Canada became the first industrialized country in the world to legalize recreational cannabis. Additional U.S. states gave the green light to medical cannabis, pushing the number of states that have now legalized in some capacity to 33. And Wall Street analyst coverage have commenced with some lofty price targets. So according to a report from ArcView Market Research and BDS Analytics, the global cannabis industry generated $12.2 billion in sales last year. However, investment bank Cohen Group foresees the industry growing to $75 billion by 2030, with Jefferies seeing an outside opportunity of the industry reeling in $130 billion annually at its peak. At $130 billion, the cannabis industry would essentially double the size of the global soda industry. So in these lofty forecasts, along with triple-digit sales growths, that have investors piling into these cannabis stocks. A lot of people are comparing cannabis stocks to Amazon as the hockey stick price just goes skyrocket. But with the exception of a very small handful of cannabis stocks, nearly all of them are losing money. So in some cases, a lot of money. But the need to ramp up capacity, build market, recreation or medicinal brands, research new products for adult use and medical purposes is laying the foundation to move into an overseas market or make acquisitions that has pretty much doomed every major cannabis stock to an ongoing operating loss. In other words, the industry is a fundamental nightmare. You look at fundamental indicators in terms of what their market cap is relative to revenue, and you'd be frightened, except nobody really cares. They're just kind of piling in. But they have billion-dollar market caps, meaning valuations. They're worth billions, but they're only generating millions. So there's quite the difference, but nobody cares because it's a nascent industry. So anytime anything comes on board, it can skyrocket. Bitcoin did the same thing. It also corrected heavily. Anytime anything comes on board initially, it's going to go skyrocket or hockey stick straight up. But there has to be fundamentals. You have to have, your price to earnings. You can't have an excessive price if your earnings are low. So ugly income statements aren't stopping cannabis stock investors, because we've supposedly seen a scenario play out before with Amazon. So Amazon lost copious amounts of money in the late 90s and throughout the 2000s, but it built itself into an e-commerce giant. It continually reinvests a majority of its operating cash flow back into the business in order to emphasize long-term growth over short-term profits, and the results show. So for the first 6 months of fiscal 2019, Aurora had lost 192 million Canadian dollars on an operating basis. But because the company has been on an acquisition bench for more than a year now, it's vaulted to the top spot in terms of projected peak annual production. Cannabis stock investors who love leaning on the Amazon comparison are also overlooking a huge gap in comparable market size. Even assuming Jefferies' extremely lofty estimates of 130 billion in annual sales is correct, keep in mind that Amazon is part of a $6 trillion US retail sales industry and doesn't even factor in its cloud computing services. So according to Gartner, worldwide public cloud services revenue is expected to increase by more than 17% to 206 billion. And it doesn't even include sales potentials for the private cloud. So to summarize, Amazon currently operates in an addressable market of more than 6 trillion, while cannabis industry can one day hope to maybe hit 130 billion in annual sales. And that's just flower though, that's just cannabis. I think if you look at the ancillary market in terms of how many jobs are affected because of cannabis, that's going to be much higher. So whether it's glass or vape or some new technology, there's going to be tech and otherwise services, more attorneys, more accountants, more bankers. So that number is going to be affected as well. It's not going to, I'm not arguing that we should look at this Amazon model, that it's okay to lose money in the beginning as you expand and you grow. But obviously the Canadian shareholders are putting up with that same thing in Canada, as MedMen and some of these other producer processor LPs up in Canada are expanding and merging. They may be operating at a loss, just like Amazon did, but Amazon is able to sell anything they want online, whereas there's limits to the cannabis industry. So to summarize, Amazon currently operates in an addressable market of more than 6 trillion, while the cannabis industry can one day hope to maybe hit 130 billion in annual sales. Most pot stocks don't have multiple sales channels, so to build on the previous point comparing the two industries, you're ignoring the fact that Amazon has numerous channels of revenue. So Amazon can make money with e-commerce or Whole Foods or Prime Services. Comparatively, cannabis stocks don't really have many ancillary revenue channels. They can sell a variety of cannabis products or perhaps partner with brand name beverages, snacks, tobacco, pharmaceutical companies, but they won't have that revenue breadth that Amazon has. Initial winners may not have staying power. Who we see now may not be around in 5 years. I would argue that brands haven't even begun to establish. If people don't understand CBD, they're not going to understand your brand. So I would argue that we're in the very, very beginning of branding. So there's a long way to go. Initially, the winners aren't going to have long-term staying power. There's going to be a lot of consolidation. So the rise of internet e-commerce reminds us that initial leaders aren't guaranteed to stay around forever. So there was a time when Netscape Navigator was the preferred internet browser, or eBay was the e-commerce destination of choice for online shoppers. So change is commonplace within a fast-growing industry, and there's little guarantee that companies like Aurora Cannabis, which looks like a leader now, are going to remain on the top of the pack for long. So long story short, just because Wall Street tolerated an ongoing loss from Amazon doesn't mean they're going to tolerate very long from the cannabis industry. Caveat emptor, buyer beware. Canada's finding out what the rest of us already knew, which is that recreational cannabis isn't the cash cow that the government had hoped for. This month, the Canadian government sent the first cannabis excise tax payments to the provinces, but almost none of the amounts were disclosed. It's likely because the checks were smaller than officials had expected. British Columbia is the only province so far to disclose its tax revenues, 1.3 million for October to December of last year. It had expected 50 million total this fiscal year, but now will be lucky to get 3 million. Other provinces haven't disclosed their receipts. Manitoba didn't even mention cannabis revenues in last week's budget. Health Canada data showed producers sold 20 tons of medical cannabis last quarter. They also apparently shipped 42 tons of recreational cannabis to distributors. The federal cannabis excise tax portion is 25 cents per gram or 2.5 cents of wholesale value, whichever is higher. So this implies that Ottawa received some 16 million in excise tax last quarter. During that period, Statistics Canada says legal cannabis sales totaled 307 million. 5% federal goods and service tax would have generated 15 million from that. This suggests Ottawa earned about 31 million in tax and excise taxes on cannabis last quarter. Adding the federal and provincial numbers gives a Canada-wide total of some 96 million. That's 62 million from excise taxes and 34 million from sales taxes. Put it another way, 59 million came from recreational cannabis and 37 million from medical. So what do you think about this potential compromise? To remove an excise tax and sales tax on medical purchases, but only for cannabis oils. Dry, smokable cannabis would remain taxable, as would cannabis edibles when they eventually arrive. I don't know, what do you think? And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge, your cannabis business podcast. Like, subscribe, and share, or don't. And I'm out.